Ladies and gentlemen, it's your boy, Ryan Dins, and on this episode, we're going to talk about a stock called Kinder Morgan. They're a pipeline company, and I'm very excited about this particular stock. So before I do that, you're going to want to Hulk smash that like button and hit that subscribe button because we're going to have great energy here. We're going to talk about energy, and we're just going to have a wonderful day. So let's go. Woo! Kinder Morgan, ticker symbol, KMI. That's a little bit of a tongue twister. It took me 3 takes to do that, but I cut the other ones out just so you only can see this one. It is a very exciting energy pipeline company. It recently took a big doo-doo because of the COVID crash. It was 22 before the COVID crash. It's around 18 now. I think it's easily going to hit that 22, but what's more exciting is it used to be at 44 a few years ago. It's very likely that it could see that kind of numbers again. It just took on a little bit of debt at 3% bond rate, which is incredibly good loan. They have a very strong balance sheet. If you look at CNBC, they are going crazy over this stock right now. It is one of the most beaten down stocks that has just a ton of room to grow. I think you really need to look into this. Also, it's got a PE ratio of about 22.5 right now, and it's got a 4.9% dividend yield. Now, as I always say, I look for stocks that I feel have room to grow and have a good dividend. You don't ever want to chase dividend yield and just pick a stock just because it has a good dividend, but this has plenty of room to grow. So they have been raising their dividend during the COVID crisis. That's a good sign. You know, they're not in trouble whatsoever. Let's be honest, the gas prices have been beaten up and all of these energy companies are in high demand right now. We're going to need gasoline. We're going to need these pipelines. This is what keeps America running. You're just going to want to look into buying more of this, but do your own research. Don't buy it just because I said so. I think it has a lot of room to grow. I think that its all-time high of 44 is a possibility, and if that were to happen in the next 5 years, you're looking at over 100% growth. Over 100% while paying you this 5% dividend. I don't think it's very risky in terms of high risk, high reward. So that's why, you know, out of all the stocks I've recently talked about, this is one of the few that I'm going to really be looking into buying some, because I just think that there's huge opportunity and not too much risk with how much it's been beaten down. Can't really go much lower, considering that we're going to need them in the future for the growth of America. It's just a necessity right now, companies like this, and as you can see, the energy sector in general and the gas sector, they've been going up really good lately. That is the only downfall of this, is it has been growing lately, so it's not like an amazing deal, but I still think it's a great deal if you look at the PE ratio, its growth, and everything like that. So, great balance sheet, like I said. You're going to want to look into this one. And that's all I got for this. You're going to want to do your own research. There's different energy stocks you want to look at. I also made a video on EPD, another one. But Kinder Morgan seems like a little bit better of a value, although both of them I would say are strong buys at the moment. That's it. So have a great day. Woo!